Hey guys, and welcome to Money Talks News, the podcast. You know, this has been a crazy year. Crypto's fallen 70%. The stock market's been horrible. Bonds have had their worst year since the 1700s. We've watched inflation hit levels not seen since Reagan was in the White House. What does all this mean as we move into a new year? Today, we're going to take a look at some of the biggest stories of 2022 and, more importantly, how they might impact your pocketbook as we move into 2023. I'm Stacy Johnson, as usual. My co-host will be financial journalist Miranda Marquit. Hello, Miranda.
Hey, Stacy, I can't believe it's time for a new year, but let's do this.
Let's do it. And today we've got a special guest with us too. Craig Ferrantino, certified financial fiduciary at Craig James Financial Services. Hello, Craig.
Welcome, everybody. Great to be here.
Before we start, remember, guys, this is not financial advice you may be hearing. So even if we discuss specific investments, this is not financial advice. Do your own research. Consult your own experts, like Craig, before acting on anything that you may learn here. Okay, let's start right in. In fact, Craig, let's start with you. Give us a little bit of background. How did you become our expert on today's podcast? Where are you from? What are you doing?
I founded Craig James Financial Services 16 years ago because I felt there was a need to give independent, objective financial advice. We're not owned by any bank or insurance company, so I can tell you like it is. There's nobody standing over me with sales goals or whatever. So with that is I started to eke out the truth. We look at a lot of media. My background is I was started out at JP Morgan many years ago down on Wall Street. Then worked at Smith Barney, A.G. Edwards, mostly also down in the Wall Street area. And got my master's degree, Columbia Uptown, that Morgan paid for. Thank you, JP. And was able to keep going. And then we set up a nice little niche, like boutique firm, where we help people manage their assets, but also get a handle on the big picture in the financial world. So we kind of pull in a lot of different information from things like that. So I've been doing that for quite a period of time, and it's been very, very successful so far.
Well, and actually, you're on the perfect. You're talking about generalizing and helping people understand what's going on. You're on the perfect podcast because that's exactly what we're going to do today. We're going to talk about the biggest stories this year and how they might impact us going forward. So with that, let us start now. Miranda, let's play a game. I'm going to say what I think is the biggest story of the year, and I want you, Miranda, to guess what you think that might be. What do you think I'm going to say?
Oh, gosh. You're probably going to talk about Russia invading Ukraine and the oil spike and everything that came after that.
I was positive you were going to be wrong, and you were right, which annoys me no end. But you were right. I think the biggest story of the year is Russia invading Ukraine. And obviously not just for the human tragedy, which of course is exactly what it is, but also because of the financial effects that it had on the world. I mean, people could literally be starving, especially people in third world nations. Oil prices went up. I mean, it's disrupted the entire planet. So to me, that is the biggest story of the year. And as a result of a lot of other things that are big stories came as a result of Russia invading Ukraine. Including inflation, stock market crisis, stuff like that, I think, anyway. So that, to me, is the biggest story. Craig, you're the expert. What do you think is the biggest story? Do you agree that that's the biggest story, or do you think there's one even bigger?
Recently, I think it's very, very interesting that the collapse of FTX.
Ooh.
Because when you throw a lot of this in, could this have precipitated, could some of the deals that were going on that were unbeknownst to the world precipitated perhaps the Russian invasion? Could that have, of course, inflation's the result of what happened, but the collapse of FTX, we all had this idea of cryptocurrency for many years now. It's not like a new thing. It's been going very, very strongly. And here we're finding out that there's some cockroaches in the closet, so to speak, in terms of their financials, what was actually backing the currency. And so I think because a lot of global transactions were done in some sort of like a non-identifiable transaction, that might have caused a lot of problems that we don't know about or will be revealed in the new year.
Yeah, and actually, let's back up a step there, Craig, because I think that is a huge story, and it's one that just happened not long ago, just a few weeks ago. But there's going to be somebody listening to this podcast who doesn't know what FTX is and never heard of them. So explain, basically, a real quick explanation of who is FTX. Why does that matter?
Well, it was a firm founded by Sam Bankman-Fried and a few other investors. You got some hedge funds involved, and they created this token, which is sort of like a Bitcoin. And again, not my expertise, but it has this whole process where buying and selling through blockchain. And Sam Bankman-Fried had this vision. As a matter of fact, A lot of famous people said he was like the new JP Morgan of our era, something we would look at. He was actually transforming the whole cryptocurrency world in trying to manage compliance with reporting and everything else. And so, but in the meantime, cryptocurrency, if you need to pay for something, particularly on the deep web, it's a way to do a transaction without using US dollars, without using your Amex card or your Visa card. And so it's sort of untraceable. And so there's so much of this money or deals going around. So he was creating a fully synchronized environment to buy and sell cryptos and account for it, and something that would compete with the U.S. dollar at one point.
So now, go ahead, Miranda. Why is this such a giant story?
So I think one of the biggest issues with FTX is its relationship. So the first thing that's, well, not the first thing, but the thing that Sam Bankman-Fried founded before he founded the cryptocurrency exchange FTX was Alameda Research. And this is a hedge fund. And so what they were doing is originally, before he got FTX set up, and when they were trying to get people to get their coins over there, to get their money there, they were commingling funds. So one of the biggest issues with this, and one of the biggest problems with this bankruptcy, is that Alameda and FTX were commingling funds, even though they were supposed to be separate business ventures. And on top of that, a lot of the collateral that FTX was using and Alameda was using, both of these companies were in what Craig talked about was the FTT token, were in their own token. So basically they were using their own token for collateral. They were commingling funds. They were doing things that made it look like FTT was worth more than it was. And so when things started to fall apart, when crypto winter sets in, when everything's falling and it's all going to shit, what you have is you've got this token that is not as valuable as they said. They're starting to find all of these things. And a hacker, and for those of you who aren't watching this on video, I'm using air quotes in hacker, supposedly came in, stole hundreds of millions worth of customer funds, and they don't know where it went. But they've discovered there are all sorts of back doors between FTX and Alameda, and this is just a theory, and this isn't allegedly, but somebody thinks that maybe somebody at FTX/Alameda might have actually stolen the funds, and it's not actually, and they're talking fraud.
Now,
they're talking fraud charges now,
has this caused a crisis in confidence in crypto in general? The bankruptcy of this giant trading platform, has this caused a crisis of confidence from which crypto may never recover? What do you think?
I think there's a possibility that that's true. And, and the other issue too is, when you start looking at it, it's, and, I have crypto and I've had crypto for 10 years. And, but at the same time, it's like crypto still hasn't yet transcended the situation where it provides something that's not already provided, and it doesn't provide something that's not already provided in an easier manner. FTX, supposedly that was the vision of FTX, that it was supposed to provide all of these benefits and was supposed to do so quickly and easily. So that's the issue, right? Is this going to expose the fact that thus far, blockchain technology and cryptocurrencies haven't actually solved any sort of problem, and has not done so in a meaningful way.
Ethereum's been used. You know what? Actually, let's not dwell too much on this.
Yeah, let's move on.
Yeah, let's move on. But let me ask you one quick question. Round robin. What's it called? Bitcoin was $64,000 last September, I think. Now it is $16,000. So it's dropped a ton. Okay, so here's my question for our panel. Are you a buyer right now of this today? Or are you going to say, this was crap, I should never have been in the first place, I'm never going to touch it, or something in between? Craig, or either one. Miranda, go first.
I was just going to say, honey, I'm just a holder because I never bought any of my Bitcoin. I was given one in 2011. I mined a block of 12 in 2012, right after it halved, and so I'm just holding.
So you're not a buyer, and you're not a seller either.
Yeah. She's still ahead of the game.
I sold some in early 2021. I think we talked about this. I sold some in early 2021, but the Bitcoin I have is what I have, and I'm just kind of hanging.
Okay, but somebody comes up to you
We'll just see
today and
what
they say,
happens.
Miranda, you're an expert. Should I buy it? Should I buy it? Well, it's cheap. You're saying no, you would not.
I probably would not.
Okay,
No, I'm just
Craig,
going to
your
hold on to
turn.
what I have.
Well, as an investor, I always say buy low, sell high. If you liked it at 64, you like it at 16. But I am not making any recommendations by any stroke of the imagination. I'm not licensed, the
Okay,
SEC.
let's ask you, Craig, are you personally a buyer at 16?
I can't comment on that either. So
Oh,
sorry.
okay. I didn't mean to put you in between a dog and a fire hydrant there.
Yeah.
Okay, let's move on. Here, another thing I put on my list, and you guys are welcome to shout out stuff yourself too, but oil and gas prices. Gasoline reached $5 a gallon nationwide in June of this year. It's since come down a lot. But that was a big story, a huge story, because you watch the nightly news and they're out there with a microphone at gas stations every day, and people are going, oh, I can't feed my children. Everybody couldn't afford gasoline. Huge story. Everyone hated Biden as a result. Blah blah blah. This was a big story. Now, where do you see oil and gas prices going next year? Go ahead, Miranda. What do you think? It's much lower now.
It's much lower now. I think it sort of depends on what OPEC does. And it also depends on whether we actually get serious about our energy portfolio in general. Because until we actually get serious about our energy portfolio, and that includes, because part of the issue, right, is everybody's like, oh, well, if we all have electric cars, yes, but electric cars get electricity from the grid,
right,
and the grid is largely powered by oil and coal. And so until we manage to get to this point where we actually have this diverse energy portfolio, and that includes geothermal, wind, solar, hydropower, and nuclear, until we actually have a wide range energy portfolio, until we get serious about it, we're kind of at the mercy of OPEC, regardless of whether we release our strategic reserves. We've got a whole bunch of unused leases, oil and gas leases in the country. So it's like, to develop, even if all of a sudden all of them decided to develop all of these unused oil and gas leases, we'd still take years to get up there. So,
I think oil is going to go higher. Right now we're at about 70. I want to say $72 a barrel. I don't know. It's December 8th today. I think oil is around 70. It's been as high as 120 at least. I say it goes back to 100 next year. Well, we're gonna talk more about whether we think we're going to go into a recession or not. But I think oil it's about where it started the year right now, actually. So it went up a whole bunch, came back down about where it started the year. I say it's going to go higher. Do you have an opinion on that, Craig?
I agree with both Miranda and you, Stacy. I think that oil does go higher. It hasn't been when the Northeast gets really, really cold is when I've been doing this a long time. Is when you start to see the prices go up. I have no empirical evidence on that, but it's just my gut. And so far, it's been it's like 55 degrees today. So when we get that really cold snap on the Northeast, you'll see the demand go up. That said, let me just comment on some of the things that Miranda was saying. Was that the strategic petroleum reserve is only about 10% now. We've depleted a good amount of it to keep the prices, and that's being it's gone through the industry. The government's agreed to buy oil at $80 a barrel.
But 70, I think.
70? Okay.
I think that's what they said.
I heard 80, but that's okay. We're within that range. But at some point, that's going to keep the price constant, or they're not going to have that petroleum reserves. Also, I think I agree again with Miranda in terms of it's a 10 or 15-year story to get us more efficient on how we use energy in terms of the whole process, because it's just really has a lot of retooling. In the meantime, you don't want to trash your economy. There's people in Europe, as you know, like stapling themselves to paintings and standing in front of runways and airports and stuff like that. So you get that group out there, and it's just not going to happen. It's just only like 2% right now of our energy in the United States is that. And the other thing I want to make sure is that we know that this is the primary role of government is to defend its people. A lot of tanks don't run on solar panels. A lot of the energy that we have to protect ourselves as a country and the peoples and the population still runs on mostly fossil fuels. So I think it's coming around, and I think there's been some changes. What what we see in the beginning of the new administration to where we are now in terms of having a little bit more working one way versus the other, having a more realistic approach. We'll see how that plays out in the next 2 years. But they were like, no fossil fuels. And now I think they're starting to say, well, the thing is, we haven't talked about OPEC in years. OPEC was like, I remember OPEC, right? We used to talk about it every week. And there was a couple of years there in the last 7 or 8 years where never mentioned in the press about OPEC because we were producing our own energy.
Yeah.
So now we're worried about Saudi Arabia and and it was something I grew up with. It's something I studied, but now we're back to where we were. It's like back to the future, which is the present, which is the past. And I was hoping to move out of that model so that it could change some of the global dynamic, both for investors and for world peace.
Well, I'll tell you what I've done a million news stories on different topics over the years, of course. But one thing I have done consistently is said, if you're pissed off at high prices somewhere, let's say your cable company or gas company, their oil company, what you do is buy their stock because that offsets, because they're going to be making more money if gas prices are higher, and that's going to offset the money you're paying at the pump. Now, obviously, that everybody can't do that, but I'm fortunate. I bought a whole bunch of oil stocks in 2009 during the Great Recession, and they sat there until now. Until this year. So I've been happy that I was hedged by owning oil stocks. And by the way, I have not sold them. I think like I said, I think oil is going to go higher. And so I'm holding on to my oil stocks. Right now, they're certainly off their highs, but I think they're going to go back up. So I own some big oil companies, ConocoPhillips, and several different things. But anyway, right now we have to take a quick break. We're in the middle of our show. When we come back, though, I'm going to throw a story out that I think was competing for top story with the invasion of Ukraine. A really important story and one that I think everyone will relate to. We're going to go to that right after this. Okay, we are back. Okay, we're going to do the guessing game again, Miranda. What's the story that's as big, that almost as big to the American consumer? I'm giving you a hint now, as was the invasion of Ukraine.
Oh gosh, I don't know. Like, are you going to be talking about like the bond market?
No, well, I'm going to talk about markets, but no, the story's inflation.
Oh, okay. So, I thought inflation was part of your Ukraine story.
It is, and so that's why it really wasn't a fair question. But I mean, if you stop anybody on the street, stop 10 people on the street right now and say, what's your biggest concern? They're going to say inflation. All 10 of them.
That was going to be my big story, and you took it from me.
Inflation it got hit 9.1%, the highest since 1981. That was in July. It's come down a little bit since then, but it's still high. And that's a huge story for a lot of people. Here's some examples that I cut and pasted here. Meat, poultry, fish, and eggs up 8%. Fruit and vegetables, 9%. Electricity, 14% higher. Utility gas, the gas service for your house, 20% higher. Airline fares, 43% higher. This is at the end of November, by the way. Rent of primary residence, 7.5% higher. This stuff is hitting people where they live. It's hitting them where it hurts. Is it going to subside in 2023?
A lot of times we talk about inflation, we talk about spot prices. So what's the price of oil today? What's the price of oil next week? Those are pretty much the price we pay today. Those have fluctuated. What's longer? So let's say you're in an apartment in New York City and your rent was $2,400 and you couldn't get a 2-year lease. So your 1-year lease is up. Now it's $3,200. Well, now I'm up 30% on my lease. And that price is going to stay there for the whole year.
Yeah.
There's no break on that. So that's sticky. If you're Subway and you charge $5 for a 1-foot sub, but your cost of materials, meaning tuna fish, whatever you put in that sub, has gone up, and you move that to $6 or $7, you're not going back to $5.
Yeah.
That's a sticky thing. And so I like to separate what's sticky in inflation and what's not.
And what's the stickiest thing of all, Craig? Wages.
Absolutely.
I mean, just yesterday I was talking to my managing editor, and she said, "Stacy, we got to give the writers more money next year." Miranda will be happy to hear.
They deserve it.
Yes.
Yeah, but imagine me going to them in 2024 and saying, "You know what, you guys? Now that inflation's down, I'm going to pay you less for the stories you're writing." That ain't happening. Once you give somebody a raise, they own that raise the rest of their life, and they're going to ask you for another one next year. So talk about sticky, and I think that's one of the biggest problems we're having with inflation now. I think wage inflation is, and I think that the Fed's having trouble bringing it back.
Well,
Dollar General is at $1.25 now.
right,
That's
but
a
wages
25% raise. That's not an 8%
Yeah,
raise.
you know, Dollar Tree.
Wages still haven't kept pace with inflation. Wages haven't kept pace with inflation for decades. So wages aren't a driver of inflation. They did a thing, and wages account for a very small percentage of recent inflation. It's mostly corporate profits. They've
Well, that is
got
true.
that out there now. Like corporate profits are accounting for a good portion of the inflation because, like you were saying, Stacy, like companies are looking at it and going, okay, inflation makes a good excuse for us to not only raise prices in terms of what things are costing us, but then add a little extra on top of it. Companies' profit margins are rising.
Okay, comrade, you've made your point.
But it's there. It's in the research, and they actually talk.
No,
about
I know.
it.
You're right.
They've been talking about it in their earnings reports for a year now.
Yeah,
like
it's
you can
absolutely
actually
true.
hear it on their earnings calls.
Yeah. Okay. So wait. Now, go ahead, Craig. What were you going to say?
Yeah, I'm not all agreeing with them. Last few times they said, yes, I agree. So we could argue and still be friends. How's that? I think that what we're missing out of the equation is, consumption is important. That's what drives our economy. And as people pay, we've been doing well, irrespective of what you think wages are, because people are spending, right? If they didn't have money, they wouldn't spend. So the economy's been motoring along pretty well in what you think is a low inflation environment and a low wage increase, and they haven't kept up, and corporate profits. Companies are in business, obviously, to make money, and that's what they're there for. You don't create a business so we just share everything. That's the third thing that was just very, very important is that we're missing one big part. You look at the economy and the GDP, it's remember from economics, consumption plus investment plus growth. So we have something, there's the revenue side and then there's the expense side. I haven't heard anywhere, and maybe the three of you could give me ideas, but we're going to cut the Department of Interior by 2% because we just can't provide the level of services. Or we're going to cut the Department of Transportation by 3%. My argument is that there's no abeyance in in government spending, which is a lot much more than that's really rising. So if we have so much in government spending, again, there's not been anything cut from anything in any agency in the U.S. government. And so if we lower the spending, I know it sounds Republican, I don't know what you would call that, but we haven't lowered any spending. And so that's part of the bill here. If we can get our own house in order as a country, I think it'd be a lot better.
That makes sense. Well, I do think inflation is going to temper in 2023, but I think it is going to go. It's going to be slower than people want it to. I think it's going to be around for a while. And I don't know that we're going to hit 2%, which was the Fed's goal for a very long time. But okay, let's move on because we're going to, how much time do we have? Oh, God, not much and many more topics. Okay, go ahead, Miranda.
I do think we need to make sure that we mention student loan forgiveness as
yes,
a major story this year.
I didn't think that was a huge story. You did because you probably have student loans.
So most of my student loans are actually not eligible to be forgiven because they're under the old FEL program. And that's not an issue for me because they're so low. They're 1.9%. I don't care. I'm just letting them ride out till the end because I'm making way more money in the market than I would paying them off. So I don't care. But I think student loan forgiveness is a big story because, more than 40 million people in the U.S. are affected by student loan debt. Student loan debt amounts to $1 trillion, more than $1 trillion. And so I just think that's a big story because
you're right. I it's a big misspoke story. When I said it was a big story. Obviously, it's a big story.
It affects a lot of people.
Do you think it goes away? Do you think it's going to happen?
And I don't know. Like we're waiting. The Supreme Court will they've blocked the student loan forgiveness. And that's the other news story too, right? Is like everybody got super excited about it. And now it's been blocked in the courts, and the Supreme Court will actually be hearing arguments about it in February.
Yeah, well, we'll see then. First of all, I don't know a lot about this. I don't read a lot about it because it doesn't really affect me that much. I read obviously the headlines and whatnot, but my thought would be that it's gonna be tough to get it done. I don't think Supreme Court's a friend of Biden's, and I don't think they're going to approve it. But I'm no expert on this subject at all.
And if you and those of you who are interested, we did do an episode on student loan forgiveness, so you can check that out.
We did.
We'll have a link in the show notes.
Okay, moving on. Are you ready to move on? Anybody have any other comments on student loan? Okay, the stock market has to be one of the biggest stories of the year. The first half of the year was the worst in 50 years. In the stock market. As of November 30th, which is about a week ago, the S&P had fallen 17%, the Dow had fallen 7%, and the NASDAQ fell 30%. However, those numbers are benign compared to some stocks. I mean, Meta, a stock I own, used to be Facebook, has gone from $350 to $115. That's now 67%. This is a $1 trillion company, or was, and its stock has almost been cut in half. More than cut in half. I'm sorry. Amazon cut in half. One of the biggest. And my favorite, Carvana. Carvana was such a popular stock. Now listen to this, folks. $274 at its height, $4 today. It's down 98%. So there are some people who just got wiped out in the stock market this year. Everybody got hurt. Some people got really, really hurt. Remember Kathy Wood, the darling of 2021. She knew she runs a fund called the ARC Innovation Fund, and boy, that thing was zooming, and everybody. She was on TV more than a news anchor. She's on every show all the time talking about all these companies. The unfortunate part was the companies didn't make money because they were bets on the future. And then that stock has gone, her ARC Innovation Fund has gone from 150 down to 34. It's down 75%. That's a lot worse than the 9% the Dow's fallen. So a lot of people got really hurt. That's a huge story. Does it get better in 2023, Craig?
Yeah, good. I think 2023 is sort of a holding period. We still have to, some of the changes we made in the economy, including the high interest rates. We'll get some information about that next week. Another maybe 75 to 50 basis point increase hasn't been played out in companies. They have made some adjustments, but as we start to slow the economy down, a lot of the technology firms tend to lag the markets. And some of the things that you were talking about earlier, Stacy, was that we're going to go with energy or something that pays a little bit of a dividend. I think that makes sense. If you're going to collect a few dividends while you wait for the United States economy to come back, I think that's might be a more prudent rule. These companies did a great job hiring, particularly during COVID. You got companies like Zoom, which sort of like non-existent. That now everybody's kind of like, I'll give you a Zoom later. Kind of like we said, we'll Google that. It's like one of those things became a normal
I'm looking it up
thing.
right now.
That also came down too, so you could have threw that on the list. But, I think that with the technology, they overhired. And so now they have to let some of those people go, but they're being hired by other people in the industry or in different industries. So it's not really, we're not getting the economy cooling enough. So we're the Fed. The bottom line is we're all trying to fight the Fed, and we're trying to make money in an increasing interest rate environment. And it's going to get tougher and tougher as those rates go higher and higher. And that'll play out over time, I think, in 2023.
I agree. I think we're going to have a bad first half of 2023 and a good second half. So I'm looking for the market to top out around 4,200 on the S&P and then drop back to about 3,300. And then I'm going to be a buyer with both hands. I still have a lot of money in the market, though. I'm not smart enough to time the market, so I keep my money in the market, but I also keep powder dry. What's that? Yeah, you're more than welcome. I don't mind being wrong. I do it all the time. Ask my wife; she'll tell you. Okay, so anyway, what about you, Miranda? Positive on the market next year? Negative?
I mean, I don't know, because we've been waiting for a real honest to goodness crash since 2017, and we haven't had it. We've had periods of we've had flash crashes, we've had short term.
Well, when COVID came out, we had pretty damn near a crash, and some might argue
that it recovered. But then it
did
recovered
right away
at a record rate.
It did. It did.
It recovered.
But but the Nasdaq's down 30% this year. I mean, that's not nothing.
Right. But we haven't seen like a real, true, honest to goodness,
like the one in 2009.
Yeah, we haven't seen an honest, sustained crash yet. We haven't seen something we'll have days when it's like, oh no, it's down 500, and then the next day it's back up 400, and so it's like we haven't seen that kind of sustained thing. So I don't know. I think we're, and I agree with you. I think we're going to go lower before we go higher, and I think the earnings are going to come in lower. Yeah,
and I think it's going to make stock prices lower. Go ahead.
As always, I continue to dollar cost average. I stick with my plan, and I have money set aside so that if I find some good bargains, I can deploy my cash if I feel like it.
Okay, now right on the heels of the stock market being a big story, the bond market's an even bigger story. How many times in the history of investing have both stocks and bonds gone down in the same year? Very few times. And one of the Here's a headline. This is a headline from the Wall Street Journal, I think. The worst performance since, ready, 1788. Benchmark U.S. Benchmark U.S. Treasuries are facing their worst annual return since 1788. That's according to a team of strategists at Bank of America. They looked at 250 years of history and concluded that bonds have had the worst year ever since that. This is literally 12 years after Washington was crossing the Delaware. That's how long it's been since the bonds have done this badly. And that obviously is a result of interest rates being zero, and then they went to 5, or close to on the Fed funds rate. So higher rates mean lower bond prices. That's why bonds have gotten creamed. I think interest rates are going to drop some next year. I'd be a buyer of bonds here. I'd be a buyer of longer term bonds. Do you agree with that, Craig?
Yes, I do. The bond market right now is communicating something very unusual. It's telling us we should be in a recession, and a deep one. You have the 2-year Treasury at over 4%, and the 10-year Treasury at 3.4. It was over 4, but now at 3.4% as of this week, as of this morning. That's a big red flag.
Yep.
But the thing that's the monkey wrench, whatever that term, the fly in the ointment, so to speak. How's that? STP, Stone Temple Pilots. So flies in the Vaseline we are. There we go. All right, Miranda. So when you think about that, it's just very, very dangerous because what we have here is with the inverted yield curve, it's giving us the ability for short-term borrowers. You're kind of telling people, look, we don't know what the long term is on this country, but short-term, here's what you're getting, and the demand. People are afraid to go short term. They want to go long term in our country. And so what that does is that the big fly in the ointment, as I was getting to, is the fact that the unemployment rate is so strong. And that meaning that the more people are employed, there are jobs available, like 10.75 million job openings with not enough people. Even with the layoffs from Amazon and a couple of things that you were talking about earlier, there's still not enough people to fill the jobs. And so that's what we need. So because of that, I think the equity market has been doing very, very well and will teeter into pretty good size into next year. Different than a scary first half because there's still these open jobs available. If the economy gets so bad that we don't need those open jobs, that's when you start to see some capitulation.
Yeah. Well, and actually, I was just reading an article yesterday. I'm trying to find notes on it now. But consumer confidence thinks Wall Street. Okay. Wall Street chorus grows louder, warning that 2023 will be ugly. This is from yesterday. Goldman Sachs said economy faces bumpy times ahead. J.P. Morgan, Jamie Dimon said it's going to be a mild to hard recession. Morgan Stanley, this is all this week. These guys have said this. Morgan Stanley's wealth management's Lisa Chalet, I don't know, told Bloomberg that corporations are facing a rude awakening on earnings. So the messages become increasingly dire. So actually, I was convinced that we were going to have a brief, shallow recession. The market was going to go down the first few months of the year, 2023, and then improve for the second 6 months. But there's such a consensus on that exact view that I'm starting to think it has to be wrong. Because anytime everybody says the same thing, you're about to have your hat handed to you. I mean, because there's just no way that everybody's going to be right. So I think it's either going to be worse than that or it's going to be better than that. What's that?
Steve, you could have read that 6 months ago. It was the same headline. Back
That's true.
Matter of fact, you could have read that 9 months ago in March, and this is exact. It's been, just a repeat. So, I think it's when everybody, there's always people that say one thing, one or the other, and it's in the end, it's going to be who you believe. And so we just got to make sure that we're not being lied to.
Yeah.
And that's why the crypto story was very scary for the year, as opposed to other things where we say, okay, these are economic things. We understand where they come from. If you're telling this is red and it's blue, and we find out it's blue, you're being lied to. That's a different, all bets are off then, because then you can't predict the economy.
Yeah. Well, as usual, guys, we've run over our allotted time. Does anybody have anything compelling that they need to tell our audience before we leave?
Just as you're looking at these scary headlines, just to remember that the best thing you can do is figure out a financial plan, keep your debt as low as possible, invest what you can, and just keep moving forward, because a lot of this stuff we can't control. And so the best thing we can do is make some good plans and try and develop good money habits.
Good, solid, albeit boring advice from Miranda.
I'm boring. We know this. I am
no,
just
it's good
boring
advice.
all the time.
Just teasing. That's good advice. Craig, any last thought?
Yeah, there is no other alternative, Tina. The United States is the best country in the world and best place to invest. Still, even with all the warts that we talked about just before. Yeah. Long term, it's I couldn't find another place to be.
You, sir, are a patriot. We are out of time, folks. We are never, however, out of topic. So dig a little deeper. You're going to find links to lots more info in our show notes, and you can find a link also to Craig's in case you want some quality financial advice. And remember, if your goal is to make more to spend less to retire rich, your online home is moneytalksnews.com. That's moneytalksnews.com. And don't forget to check out Miranda's online home as well. That is Miranda Marquit, MARQUIT.com. And you can find Craig at his website, which is craigjamesfinancial.com. Again, all these links are available in our show notes. If you've got a question, comment, or topic you'd like to suggest, well, don't just sit there. Tell us. All you got to do is email us at hello@moneytalksnews.com. That's hello@moneytalksnews.com. And one last thing, if you like what we do, then do something for us. Subscribe to our podcast. Takes you 2 seconds. Helps us, though. So if you like us, show us and subscribe. I'm Stacy Johnson.
I'm Miranda Marquit.
And I'm Craig Ferrantino.
That was perfectly done, Craig. Very good. Thanks for hanging out with us, guys. We're going to see you right here next time.